So here's the latest. Regional bank earnings in full swing on the heels of a strong showing across the board from the larger financials. Investors eager to see the impacts of lower rates on the smaller lenders. With us around the table, Bloomberg's Herman Chan. Herman, good to see you.
Thanks for having me.
Had a few names report already. Yeah. Can you share some of those names with us, and what's the early takeaway?
Yeah, so a number of banks have already reported. U.S. Bank, PNC. Today we've got a number of them. M&T, Truist, KeyCorp, Huntington. I would say across the board things were really solid, as Gerard had noted earlier. Net interest margins are starting to expand in this point of the rate and economic cycle, and that's really good to see. Loan growth really hasn't materialized, but because of the margin expansion, we're seeing better net interest income.
Just help our audience understand the relationship between the regionals and interest rates. We know how much it hurt them when they were going up.
Right.
How much is it helping them now they've started to come down?
Yeah, I would characterize it as more of a yo-yo effect. So a couple years ago when the Fed started instituting rate hikes, that really helped net interest margin and interest income. Last year with the regional bank turmoil and SVB and a handful of other regional banks failing, banks really had to jack up their deposit pricing, so that affected their net interest margins and top line. And now we're in a sort of a steady state where things are starting to benefit marginally, and that's really helped the top line.
How much did the outperformances come from interest rates going lower versus an actual improvement or ongoing strength in the underlying loans that they've made?
Yeah, so the rate cuts really happened in September, so not really affecting the third quarter reported numbers, but that'll be more of a fourth quarter effect. In the third quarter, it's really, they've got these loans and assets that were put on their books 3, 4, 5 years ago at a much lower rate. So those reprice at a higher rate now, and that's really helping the top line.
The reason why I ask is because there's a sort of forward look that we're trying to glean from some of the earnings that we've seen in terms of the credit impulse to the rest of the economy, and whether it's the Ally Financials of the world and the warning about credit deterioration that really will be the dominant theme going forward, or whether it's going to be the ongoing concern around just income based on rates. Do you think that based on the earnings that we've gotten so far, that the fears of consumer credit deteriorating rapidly are overblown and that we're not seeing anything in these earnings that really confirm that?
On credit quality, things the banks are really stacking another quarter of strong credit performance, and there hasn't really been anything that would concern us in terms of deterioration of the overall economy. Banks, you can view them as a read-through across for the overall economic backdrop. And what the banks are saying on the regional standpoint is credit's been really benign. We're seeing really stable net charge-offs. They're starting to inch up a little bit, but really nothing to be worried about or overly concerned about.
We haven't spoken to you for a while, but you were coming on loads, and we talk about commercial real estate every single time. What happened to the story?
Yeah, it's a long-term picture, right? So we get these negative headlines, and PNC is one that has talked about being in very early innings of the unraveling of office commercial real estate. So it's going to be something that we'll continue to talk about over the course of next year and the year after. But again, the banks have added to the reserves on these office commercial real estate properties, and now we're talking about north of 10% reserves on these problematic loans. So any sort of deterioration is going to be absorbed by those.
You're fairly confident we can handle this into 25, even if rates don't come down as much as people think they will?
Yeah, at this point, I think so, because these are known risks that the banks continue to add to reserves, and it's not going to surprise anybody if there's going to be an office default coming down the road.
We've seen a few of them. Herman Chan, it's good to see you.
Thank you.
Thank you very much. On the regional banks,